a certain size, both in GDP terms and in market cap terms, it is now too big to ignore. Previously, also many guys, maybe in US and otherwise, may have known that the Indian market, which by the way has done very well over last any period, 5, 10, 15, 20, 25 years, but they could afford to be lazy about it because it was maybe a small part of the world, small part of the index and things like that. And so the people who basically do jobs in uh, these companies rather than take it as their own money and are basically just doing a 9 to 5 job could have ignored it. Now it has become too big, too visible. And also because most of these investors or many of these investors just following trend landed up in China and put big amounts and have been burnt beyond their wildest imagination, also want to come to India in some sense. I think that is the trend. That trend doesn't mean it has to go one way all along because the Chinese market has become very cheap. So someday somebody might again play a catch-up trade. Their numbers of travel and plane trips and railway trips in this Chinese New Year have been very, very good. But even after that, their market did not go up. But broadly speaking, people won't completely walk away, but allocating new money that can come to India, and I think it will come. Although the start of the year has not been good for us in terms of FII flows. If you see in Jan and even Feb month to date, I think both the months have been negative. But still, this big macro trend is the trend for which we are all playing.